Good morning, traders. It is December 20th, 2020. It's 9:30 in the morning, and I promised someone I would do a video on all the ARK ETFs. And why is that? Is it a good investment company? Sure. Can you make more by timing when you enter? Yes. Plus, some of their ETFs are clearly speculative, and I like safe ETFs. So let's go with ARK Innovations. I want you to notice the chart. Here's your 20-day moving average, right? Now, as far as an entry point, I do like the fact that it has all this red down here because people were taking profits and it brought the price down. This would probably be a lot higher. Is this an entry point? For me, it is not, because I look at this 20-day moving average. Now down here, when it was in the red, that would be a good entry point for me. Now look into charts and you figure for yourself. This is ARK Innovations, and they've been very smart with innovations, investing in innovations, going into the particular stocks that are moving up, for instance, right? It would have been great to catch ARK over here when the market corrected, right? You were at 94.76 at the low of the day here, and you would be up a lot, right? Let's say even for 100 shares, you'd be up a lot. So from my perspective, this is not advice. This is my strategy. I would have liked it here maybe. The low of the day was 117, right? So your market makers, your big time accounts, they like to come out of their investments just to bring it down and get it cheaper. That's my opinion anyway. That's my observation. I'm not in, full disclosure, I'm not in this particular ARK investment, but I'd like to see it come down to maybe 120 on a really bad market day or something, and then I might scale in, right? Okay, that's ARKK. Let's go to ARKW. Another one. I'm not saying I don't like the company, but I'm saying I don't like when it's this far away from the 20-day. Do you see a pattern here? Now, this particular technical analysis science, I guess you could call it, is not perfect. But you notice what big money did. They waited for a correction and then they got back in, right? And then they rode it up. Right here, big investors decided, you know what, maybe it's time to take profits. And they brought it down to the 20-day and they got back in. But a lot more got back in and they rose it up. Will it come down to the 20-day? Nobody can guarantee you that. No one should be making predictions on the market. There's guys out there that are great at making videos, and their headline is price target for such and such. Well, that's pretty good for getting people in on emotions, okay? But you should know technicals. ARKW, this is next generation. I like the ETF. I like their thinking. I like everything that ARK is doing on the next generation ETF. I think Kathy Wood is a visionary. But for me, I would love to see on a market correction, maybe we'll correct at the end of December after the Santa Claus rally. I don't know. If it gets here down to 140, I would probably start scaling in on this one as well. But that's safety. I'm safe, right? Unless you know how to do stop losses, unless you're going to do a stop loss, like let's say you got in at, let's say this shoots up to 52 on Monday, and you jumped in and then put a stop loss at 151.95 or something like that, and it keeps going up, and then you just keep adjusting your stop loss, then you're saving yourself a loss if it goes down. And then you could take the next dip. You can't play around with your money. You don't know if the market's going to correct. Now, this one is, someone asked me directly on this one. This is a very speculative ETF. Or no, it isn't. This is robotics. Yeah, I like this one. I want to get in on this one, actually. If you look at there's other ETFs on bots. I always do well with them, but I always try to catch it on a low, right? So you see back here, this would have been a good entry point, in my opinion. This is not advice, it's my opinion, and it's my strategy. So if this comes down closer to the 20-day moving average, this line, look at back here, all your ARK ETFs, look at what they did. Market correction. Market correction. In fact, if you can get in on an ARK ETF when the market corrects and they start hitting this 50-day moving average, you would be up from around $58. Look at that. That's a big move. And if you had 100 shares, imagine how much you would have, right? So I believe in strategy. I believe in safety. I believe cash is safe. Investment has to be watched. So I do like this ETF. In fact, I'm not in it, but I'm going to actually look to get in this one, because I think robotics is safer than your speculative stuff. But they're visionaries over there at ARK, and they've been doing really, really well. This is the one that was asked about in the chat room. What I do like how they are fading down here. So your options traders are basically fading this thing. They know that when it hits the 20-day, if the market stays strong, it's likely to bounce off the 20-day. So I like this one at a correction around 90 bucks. Right? If the market really corrects hard, then let's look what happened last time. Over here, the market corrected really hard, and this went all the way down to 63 bucks. So imagine you getting in here, and then you have a major market correction, and you bought 1,000 shares. Imagine the heartburn you're going to cost yourself because you weren't patient and you did a FOMO play, fear of missing out, and you bought too high, right? I don't want anybody to watch their account go low, but I certainly want to see a nice big correction in late December. Okay? Genomics is highly speculative. Highly speculative. It's looking into the future, where they study your genes and find where your weaknesses are in your body. And then they go in there and they manipulate your genes, your chromosomes, and it triggers something in your metabolism that brings self-healing. That's what this one's about. Look into it for yourself. There's plenty of videos from ARK on what this ETF is about. And I love the fact that they are transparent about all their investments. So this one's speculative, and it moves on news if you watch a stock called Crispus, they're highly invested in that one. So when Crispus goes down, this goes down. Okay, so that's my opinion on this one. I would like to see this one correct down to the 50-day, to be perfectly honest with you. What level that is depends. It depends on where it goes from here. Maybe it could be anywhere from, say, 82 bucks down to 75. On a big market correction, this could go down to 60 bucks. Okay? So be careful. Use your stop losses. Get out. If you got to watch the S&P, and I'll do a video on the S&P also. This is fintech. This is the one I am invested in. Okay? I got in down here, I think, at 47 something. But I added to it. So my investment is at 48 something, right? So here's what I'm worried about here. On your chart, you see this trend line? That's my line. That's not a chart line. That I made that line there. Because I notice all back here and here, it keeps, I'd like to know what the average is here, but as far as your market indicators, look how far away from the 20-day it is. Why is that? Because they invest in PayPal and things of that nature. I consider this one really pretty safe because it's pretty obvious what's happening with money. You can transfer money using Facebook. You can transfer money by using PayPal. You can transfer money, what's the other one? Venmo? Venmo, I forget the name of it, but I've transferred money that way. So what does that do? You don't need a bank, right? So the bank stocks are going lower, and your peer-to-peer transfer of money, they're going higher. Again, big correction in the market right here, see? And I'm one of those people that believes corrections are planned so that the uber rich can get stocks at a lower price, and then they run them up again. While people's 401ks and their heartburn and they're crying, they're worried about their investments. But the market makers are the ones that move the market. So if this hits the 50-day like it did here, again, on a big market correction, I'm going to go back into this one with both hands, because that's not advice. You do what you want with your money. But that's what I'm looking for on this one. I'm going to probably start putting a stop loss out there at around 49.50. Especially if this goes up to 52 next week. That way, my investments are protected. You should protect yours as well. Let me see if I got any more windows open here. I don't. So let me show you SPY to help you understand charts. This is SPY. This is an ETF, and it mirrors the S&P 500. Look at what the market makers did on Friday. They used the arguments in the government to get their investments at a better price. That's what they did. That's my opinion. They deliberately dumped their stocks, sold to bring this closer to the 20-day moving average. You see, they did it back here too. They made some of these day traders think that they were losing, they're going to lose their money if they don't get out, and they took out stop losses. That's what they did, in my opinion. Okay? I wasn't at my computer, or I would have been out of DraftKings. I think I'm still okay, but I like to trigger my stop losses where the market doesn't see what I'm doing. So it's a little tricky the way I do it. See this red candle here? So what did they do after they dumped the market on you? They went back to 370 bucks, right? The high of the day was 371 bucks. So you should be looking at the SPY is my point here. Now this is the daily chart, right? Here's a big correction. Did you remember the ARK charts I showed you? If you look at the ARK, the ETF, they did the same thing. So if you're patient and the market corrects, now sometimes you got to be careful. You still want to scale in because they are ruthless. They are ruthless. They do not care about you. They care about their own money. And if they can get their stocks on a big correction, let's say they bring the market back down to 330 bucks, while you watch your 401k get dumped out and you're worried about your future. These uber rich market makers do not care about your emotions. And you can bet that at some point they're going to correct the market again. When it comes down to the 50-day, then you might think about scaling back in. But hopefully you're not holding the bag when they play around. But you could have got out and then get back in at some point. So that's what you should do. I'm not a financial advisor, but I've learned a lot in 5 years of trading. They don't care about you. They don't care about me. But there are good entry points, and there's some times where you should get out and wait for them to stop playing their games. And usually it's when it breaks the 20-day. Usually. They've been doing that, right? They've been playing that game since November. They took the whole market down below the 50-day moving average back in October, right? October. And then they start investing, they move it up, they tell you everything's good, and then you buy up here and they dump the market on you. So learn how to protect your investments, learn charts. I'm going to create a chat room, and then maybe enough people will join. There's an app called, oh man, I forgot, Discord. It's free. You could create a chat room, and I'll do what I can for as many people as I can. All right? Thanks for listening. God bless.